Good afternoon, this is Pat Walker, Mission Winners, doing a training coaching video on the ETFs. Why do we scan the ETFs? Please know this, it's not because we like looking at a bunch of charts. No, we all have a limited amount of time. We all have the same amount of time. Nobody has more time than anybody else, but it's how we use it that can separate us from others. We look at the ETFs to look for industry themes. We're looking for strength, sectors, industry sectors to possibly get involved with, or the other side of the coin, when we see extreme weakness, areas to avoid to prevent ourselves from having problems. That's why we do this. The upper left-hand corner gives the name of it, the ticker symbol, and I'll say it on the video, ARK Genomic Revolution. By the way, this is the 200-day, this is the 50-day, the 21-day, and the 8-day, okay? And you can see it's below all the moving averages and it's falling on increasing volume. Be careful with that. What's that tell you? ARKG, you could look up their leading stocks, or you know what kind of industry group is, stay away from it. There you go, done. There's power in knowing what to do. There's power in knowing what to avoid, right? So let's continue onwards. Right here, cloud computing, falling on increasing volume below all the moving averages, be careful. Commodity index, showed a little support here on Friday, but not a lot. It's below all the moving averages. Just be careful, okay? I will say the 1+, it did show some support on increasing volume, but it's below all the moving averages. It's this, you're not going to see this setup in any book saying, this is what you look for to buy. You wouldn't hear Bill O'Neill say, you see this setup right here? This is the kind of things we look for. No, you wouldn't hear it. By the way, Bill O'Neill's one of my heroes. I'm grateful to have met him a couple of times. He changed my life. So, but it's nothing good here, all right? Let's continue onward. The diamonds, look at this. It's dropping like a rock on heavy volume. Be careful with that. Stay away from the Dow stocks. Stay away from the markets in general. Electric vehicles are losing the 200-day. The 1+ is this. They fell, but they didn't fall on really heavy volume on Friday. That's a potential plus with electric vehicles. What's the go-to electric vehicle? A little company called Tesla. We've been involved with it for a while. We just sold it recently. Dow Jones Internet, losing the 200-day, gaps down, falls below the 50-day, below the 200-day. What's this say? Stay away from internet stocks. Be careful. The IBD 50. This is a great proxy. The IBD 50, the leading stocks, and look what it's doing on heavy volume. Folks, this ain't Uncle Ernie selling, okay, or Aunt B. This is serious. It tells you, be careful with the quality growth stocks, and the IBD 50 contains quality growth stocks. They're selling them. This one focuses on the MAXLIST. Dorsey Wright. I put that on the note on there. FV's the ticker symbol. This thing's losing all the moving averages. What's the 1+? It fell on less volume. This is ugly. You're not going to see this in any chart book saying, this is what you want to do to buy. So be careful with those, all right? Continue onward. China's lagging. Not a lot of power in China. Gold miners ran up and closed near the lows on a pickup in volume when it was selling. Below the moving averages, be careful with gold miners. Gold, on the other hand, lifted up on a pickup in volume. Gold's kind of a defensive area, right? When everything else is looking pretty crummy, people go to gold. Okay, so that's something to remember. Maybe something to look at. Gold, GLD. I'm not saying buy it, but from everything we've seen, have you seen anything that looks as good as this? There we go. But remember, you need a good market too, all right? Can't stress that enough. Biotech, another biotech ETF. What does this say? What has it been saying? Stay away from biotech stocks. We haven't had a biotech stock on the key list for a long time. Looks like junk. Leave it alone. Oil, energy, nothing good there. Be careful with that. Leave it alone. Software technology. You can always see the name dropping here. Look at the volume selling on this. That's serious selling, institutional selling. It's saying stay away from software stocks. Dow Jones Medicine. They need drugs, don't they? I had to say it. Sorry. It's dropping like a rock. Be careful with medicine stocks. Mid-cap stocks. IJH dropping on heavy volume. Be careful with mid-cap stocks. Aerospace defense dropping. Be careful with aerospace defense stocks. Home construction's losing the 50-day on pretty heavy volume. Be careful with home construction. S&P 500 growth. You can always see the name up here, folks. It's on the chart. Losing all the moving averages, below all the moving averages, falling on increasing volume. Be careful with that. Small caps. What does this tell you? In 1 second it says, I don't think I'm going to be looking at many small cap stocks. That's good to know. See, what's really important in investing is things to possibly consider for buying, but there's also power in knowing things to avoid. There's power in both sections. We do that at Mission Winners. Here we go. Dow Jones Real Estate. Yeah, I don't think that's very good. Transport's losing the moving average. A little support on the 200-day. That's about where the good news stops. Airlines. I think they lost some altitude. I had to say it. I'm sorry. By the way, we take this very seriously at Mission Winners. We have to. You do. You have. It's your money. But enjoy it too. Have some fun. Okay? Just have a positive attitude. Here's QQQ losing the moving averages. Look at the selling volume. It just says be cautious. That's all. Retail, be careful with retail. Silver, it's up, but steel lost the 50-day on a pickup in volume. Be careful with steel. Looks better than a lot of them, okay, but still not that great. Heavy selling on this bar, heavy selling on this bar. Continue onwards. Semiconductors. Now, in relation to all the others we saw, this doesn't look too bad, does it? Semiconductors. What's the negative? Well, there was a tail bar here. There's a tail bar here. That's where it runs up and reverses down, runs up and reverses down, runs up and drops down on heavy volume. What are they doing? They're selling it. It's stronger than others, but don't argue with price and volume. Be cautious. Spiders, the S&P 500. I love looking at these major index ETFs, especially the spiders and QQQ or SSO and QLD. Tells us much of what we need to know. Spiders dropping on heavy volume below the 200-day. Be careful. SSO, same situation. Look at that. That's serious selling. That's big money moving out. Be careful. Solar, losing the moving averages on increasing volume. Be careful with solar. Treasuries picking up. Treasuries are what? Kind of defensive. When financials are in trouble, it's tough on the market. That's a fact, okay? Small cap, leverage, stay away. Natural gas, there's no power there. Stay away. Uranium, nothing. Oil, another energy ETF, hanging in. You see the theme? What is the common theme for strength from the list that I just shared with you? Well, energy doesn't look too bad, Pat. Here's USO, here's OIH. That fell really hard though, isn't it? See the cross currents there? Doesn't look great. The point is this. It's rough. It's overall rough. This isn't that great, folks. All right? It's better than most, but you're not going to see that in many books saying this is what you buy. Err to the side of caution. Consumer discretionary, losing the moving averages. Be careful of that. Leave it alone. Aerospace and defense, not so good, folks. Be careful with that. Another biotech ETF. Gosh, I think we've seen 3 of them now doing this. What does this say? And it's been talking to us for a while. Stay away from the biotech stocks, and we have. Home builders lost the 50-day on heavy volume. This is serious selling here, folks. On this bar, it did 3.3 million. On this bar, 9.4 million. Almost 3 times as much. They're selling it. Beware of home builders at this point in time. Materials. You need materials to build things. Look at this. Not so good. Continue onward. Communications. Not a lot of power there. Serious selling on Friday too. Be careful. Energy dropping. Be careful with energy. Financials. Look at this. And it's been talking for a while. Excuse me. It's been talking for a while. Drops down here on a pickup in volume. Falls. Oop. Drops further on a pick. Never argue with price. If there's one lesson here, it's this. Please don't argue with price. Price backed by volume tells us everything we need to know. Industrials are hanging in kind of, but still not a lot of power there, okay? Technology falling, still above the 50, but that's serious selling on Friday. Be careful with technology. Consumer staples, leave it alone. It's below the 200-day. Healthcare, what does this say? Stay away from healthcare. Consumer discretionary, dropping on increasing volume. Be careful there. Metals and mining, what is that saying? Areas to avoid? Oil, another energy. That's kind of rough there, folks. Be careful. Retail, losing the moving averages on heavy volume. Be careful with retail. Software, it's been telling you, stay away. Now we look at the MAXLIST stocks. I love these stocks. Apple, I just showed you the indices that are getting killed. This is still hanging in here. I'm not saying buy it, but is it falling as hard as the indices? Here we go. Here's Apple. Let's do QQQ. About the same, and Apple's a big chunk of QQQ. Here's QQQ. Here's the spiders. What's worse? The spiders. The S&P 500 is weaker than the NASDAQ 100. What's in the NASDAQ 100? Well, Apple's one of them, folks. Support on the 200-day. Maybe it'll bounce. I'm not saying buy it, but it is hanging in above the 200-day. Amazon, well below the 200-day, cracking down. This was really good. You see this base right here? Right here? This was bought and added to here. Sells into strength. Really helped us. Got out of it as it dropped. Locked in gains. And now we're out of it. Just watching. Taking a look at it here, it's just kind of basing. Not real powerful. Be cautious. Alibaba, there's nothing there. There's nothing there. There was here. We owned this. This was on the key list right there. Look at the volume on that bar. People talk with their mouths and vote with their mouths. They voted. Sells into strength. Last sale right here. Said that's enough. BIDU, it's okay. You want to see something interesting? In an ugly market, this actually closed up on Friday. How about that? Okay. And it's just got a base right here. Looks stronger than a lot of the others. I'm not saying buy it. I wouldn't say buy anything right now. But there's more strength here than many of the others. There's BIDU. Here's Google. Rallied up, dropping down on a pickup in volume. Perhaps it'll form a higher low. Nothing really great right now. Okay. This isn't a slam dunk setup right here. That's the bottom line. Goldman Sachs. Banks. You know about Silicon Valley Bank today. Look at this. This, you know what this says? Never argue with price. Never. It will keep you in line. Here's another important lesson. Goldman Sachs drops down hard on heavy volume, falls on less volume, starts to lift up on a pickup in volume, rallies up to the 50-day on less volume, tails off, runs up, gaps up, runs up and closes down a little bit below the 50-day on low volume. People say, guys, that was a decent bounce. The next day it gaps down and drops on a pickup in volume, and it's all she wrote. That's great chart analysis, and you know what's great? It ain't rocket science. It's just looking at price and volume. Continue onwards. MasterCard, there's not a lot of power here. I'd be really careful with that, okay? Let's continue onwards. Meta. How's that look to you? In relation to a lot of these charts, this doesn't look too bad, does it? I mean, I just showed you 5 charts that are dropping hard. This one's hanging in here. Something worth watching going forward. Microsoft, basing, but not a lot of power right now. This really needs to take out this line, folks. I'd be cautious with that at this point in time. Netflix, no. There's nothing there. Don't make a silk purse out of a sow's ear. How about that? It's not there, move on. Continue onward. NVDA, you go, dang, you just showed me some that look pretty crummy. This looks pretty good. We bought this. This is a MAXLIST stock. First buy right there. Add-on right here. Look at the volume on this bar. See the clean and simple flat base? Look at the volume here. Note the trend up the 8 EMA. Gets up here and starts to pause. We sell some, okay? Comes down here, and then it gaps up, and we were thankful for that. And now it's just facing. Some of the sells right here. We're still in it. VIPs own this. Note the trend up the 21-day moving average line. So here's the game plan for us. What do? We'll just watch it. We've got small shares left. The market's crummy. Remember, the M in mission winners is the markets. Don't argue with the markets. You know, it's just, don't impose your will on the stocks. Let the stocks and the markets tell you what to do. Support on the 21-day. If this starts losing the 21-day, falling through it, we'll sell the rest for good profits. That's it. If it bounces off the 21-day and the market strengthens, guess what we do? We'll buy more. Or we'll make an initial buy, one way or the other. There's a great lesson for everybody. Let's continue onwards here. Tesla buys down here, right here. Look at the clean and simple flat base. Look at the volume pickup. Look at the base. Look at the volume pickup right there, folks. Going across that line. Looks pretty rough right now. Maybe it'll get back above the line, but we have to wait and see. And then finally we go to Visa. Visa's just kind of loose. There's nothing to do with it. In a pretty crummy market, this has been a great move. In a pretty crummy market, this was a great move. Both of them were on the key list. Both of them are MAXLIST stocks. I just went through the MAXLIST stocks. There you go.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.